Amur Minerals has been delivering updates on its drill program. We've been hearing a lot from Robin Young about the way in which the company is rolling forward and delivering new prospects in terms of its project in the far east of Russia. Robin's with us now with some more analysis of where the company is, and one of the things I know we want to talk about today has been your survey of the debt markets. Long-term funding is for any small cap company a big issue, but I know that you've got some interesting news to update investors on and where you are with the long-term prospect.
Thank you, Jeremy. What we have been doing is we've been working with Medea Capital, and they have conducted a survey of the international financing markets for long-term project funding. And they've been able to identify that there is definitely a desire to fund a large-scale nickel sulfide project located in the Russian Far East. And as a result, what we've been able to do is restructure our plans going forward and target this long-term objective of us, a junior mining company, actually being able to obtain long-term project financing.
You talk about long-term. Explain just how long-term you're looking for and when you're talking about this sort of funding.
With regard to long-term, we're talking about the construction loans. So we're looking 3.5 to 4 years out when we'd actually begin the construction of the project, which would include a rail siding, possible furnace, the roads itself, and all the operations on the mine site. So that would consist of a debt equity package, and the debt package would probably be funded over a 7-year period. So that's our real target area that we would be working with.
In the meantime, you've been releasing more cost updates, haven't you, to investors as well. Where do we stand in terms of the cost projections?
The cost projections have been estimated by RPM, which is Runge Pincock Monarco, based out of Australia. This group has identified the fact that our production cost per ton of ore is about $24. And the way that translates into a pound of nickel production is we can actually mine, process, and transport our concentrate all the way from the mine site itself to delivery at the rail siding for about $1.78 a pound. This is a very good, solid price. We do and are looking at 2 additional add-on cost alternatives. One is what is the cost component that's related to a smelter if we own it. The other is what are the costs that would be related to a toll smelting. We're not at a C1 level cost yet, but we're very encouraged at having the $1.78 deliverable price.
At something like about $4.50, I think, at the moment a pound for nickel. Obviously, you've got a bit of room to play with in terms of your add-ons there. What are the arguments for and against having in-house smelting against taking it out to the market?
Well, there's 2 major differences. If you sell on to a smelter, they generally will keep 30% of the metal as part of their fee. Whereas if we do our own smelter, we get to keep that 30% of the revenues. Over the course of time, when you're looking at multi-billion dollars of potential revenue, that's a substantial difference. A 30% on, say, $1 billion is $300 million that would go directly into our pocket.
Yeah. Let's talk a little bit more about the asset and the ongoing exploration drill program that you've got. In terms of the assets you've got and the recoverable metal, how far down that route are you able to disclose to investors precisely what the recoverable metal rate is?
With regard to metal recoveries, we have 3 areas that are of interest. One is a mining dilution. In other words, what percentage of the ore bodies can actually be mined themselves. Our resource estimates are based on a 0.4% nickel cutoff grade. Right now, at today's costing estimates from RPM and today's metal price, the cutoff grade is actually lower than the lowest grade within our resource ore body, the resource of our ore body. So what we're seeing is the potential of 100% of this resource being available to mining. The second component is the metallurgical recovery, which is what part of that nickel can we actually extract from the rock. We're seeing numbers in the order of 80%. These are all typical of the industry as we see it today and as operations function with regard to sulfide recoveries.
Now, you've released some exploration numbers. How important are these? Give some more depth on the numbers that you've told investors about today.
What we've done is this year we started in May, an earlier than usual drill program. And what we've started is we're drilling 2 deposits. We've split our rigs apart. We're drilling to the east from our Ekanskoy deposit. We've identified a zone that's 500 meters long at a minimum, and it's running about 1% nickel. And it's very interesting. This is some of the highest grade nickel that we've intersected at this point in time. Usually when we talk about our metal content, we talk 1% nickel equivalent. We're just nickel only at this point in time. In addition, we've stepped out and we're drilling at the Kubuk deposit, where we're chasing the mineralization back towards the Ikinskoye area. And we've confirmed the existence of the mineralization in that area as well. So we have this area that's about 2,000 meters long in between where we believe that the deposit could link up. So it's a very, very large target. And at the end, if we can prove that the mineralization is continuous over that entire length, the one deposit of Ikinskoye and the other deposit of Kubuk could actually become the Ikin-Kubuk deposit and have a total length ranging from 4 to 5 kilometers in length.
Okay, that expands the project considerably from what we already knew about. So that's a critical update. Finally, what's the summer looking like? Because you, I believe, have got a fairly busy program planned over what is otherwise, for many, a very quiet period.
Yes, as we announced earlier this morning, we have released an update on the Ikinskoye, or excuse me, on the Kubuk area in particular. And what we're seeing is an expansion of about 50% of the spatial limits on the deposit. Presently we have 15 million tons in the deposit. We had 10 million tons of inferred resource, which we've converted to indicated. So we're looking at a very substantial increase in the mineable potential in this area. And all the new metal that we're drilling looks to be underground recoverable. We also have an update coming out on the results from the Ikinskoye area, where we've done a significant amount of step-out drilling, and we're looking to release that information in the very near future.
Okay, we're looking forward to that. Robin, in the meantime, thanks indeed for joining us. Robin Young is the Chief Executive of Amur Minerals.